We're excited to have you here for our webinar today, where I'm going to be answering the most asked questions we receive on the cash flows. Some quick housekeeping items before we jump in. This session is being recorded and we will send you a copy shortly after this webinar ends. And we will also have a live Q&A session at the very end. So please feel free to ask questions using that Zoom Q&A field to ask questions throughout the webinar. And then we'll have some time at the end to walk through all of them. So just before jumping into the cash flows today, I am going to be talking through the fan favorite Adam Sandler plan. So I'm logged into RightCapital and I'm just opening the Adam Sandler plan. And I am going to start off with just a quick overview of the plan. So at the very top right of my screen, I'm heading over to the profile blueprint. Just want to give you a quick overview of this plan, just so you have some foundation on the plan that I'm talking through today. So here we have Adam and Jackie. They are 53 and 49, very standard plan here. We have some bank accounts, checking accounts. We have our investments, primary home of around 550, and then we have our retirement plans. So their net worth is around 1.6, including their primary home. And then there's two children entered into the plan. We have Jack and Maddie. So really just a standard plan here that we're walking through today as we answer the most asked questions about our cash flows. So I am going to head over to the retirement tab up at the very top of my screen, and then head over to the retirement cash flows. And that is on the far right here. So cash flows really provide a detailed year-by-year projection, looking at income, expenses, savings, withdrawals, really to help you understand how the client's financial situation evolves over time. So a lot of advisors will spend time building out proposals in the retirement analysis section, and then they'll head over to our retirement cash flows really to see that detailed breakdown of those financial projections. So I just want to go through all of the tabs we have here and just give you a quick overview. So first up is our Maps tab. So this is a visual of the cash inflows and outflows using a waterfall and a breakdown chart. So this really helps clients understand the financial flow year over year in the projection. So a lot of advisors will start off here with clients when they're presenting or just talking through the financial plan, just because it's very easy for clients to follow. So instead of line by line looking at year over year, I can show them a really nice visual of all of the income coming in, so total inflows, and then I can talk through let's look at the outflows and where that's going. And then it really highlights based on scale to show, okay, a lot of it is going to expenses, and then let's see it's trickling down to living expenses, housing, insurance premiums, same thing with tax payments. So this is just a great way to talk through that with the client. We just recently launched a product update that allows you to drill into the Sankey diagram in more detail. So for example, on the right-hand side, if I wanted to click into housing, I can expand that and then look at mortgage, principal and interest, property tax, and really just see that total outflow. Same thing with all of the debt, insurance premiums, taxes, as well as plan savings. So very interactive, really a great place to start with clients to really look through that breakdown. So this is the waterfall chart in the Maps tab. And then you'll notice a detailed line right below the title of the graph, that waterfall. And I can click into each year of the planning projection and then look at that waterfall chart for that year. So again, very helpful to walk through it with the client. And then I can also switch over to our next awesome visual, which is our breakdown. So this is just going to show total inflows and total outflows. And again, I can always expand into the breakdown to say, okay, what's making up that living expense figure? Or again, similar to that Sankey, expanding to look at housing, for example. So our Maps is really the visual of the cash flows for the clients. So that is the Maps. And then right next to the Maps is our summary. And this is more of that traditional cash flow. So this is looking year over year, financial overview, includes income, expenses, savings, and the net flows. Really helpful to see is the client on track to meet their goals. And then the net worth is really to display the client's projected net worth over time. So highlighting assets, homes, properties, business, mortgage, any other loans, really to give you that total picture of their net worth. Then the invested assets is going to give you a detailed performance of invested assets, showing how contributions and market returns impact the portfolio's value. So here we can see beginning balance, walking through plan savings, matches, net cash flow, as well as the portfolio return. And then the accounts tab, very helpful. I would say this is one of the most popular tabs in our cash flows. This is going to break down the cash flows by individual accounts, so provide a clear picture of how each account contributes to the overall financial plan. So I always like to point out that in the accounts tab, we have this drop down in the kind of the right-hand side of the page next to that proposed plan, where I can click on ending balance by accounts and expand this to look at any addition to accounts, very popular one looking at RMDs, also withdrawal from accounts, and then net cash flows. So this is really painting that picture of what's coming in and where is it going kind of throughout the length of the plan. So again, that is that drop down looking at ending balance by accounts, and then I can switch over to various different items here. And then lastly, if you do have stock plan entries entered in the client plan, we do have an options tab here on the far right. And this is just going to go over all of the stock plan information in the cash flow version. So you may not see options. This is just automatically turned on when you are in profile net worth and you're adding a stock plan entry. So that's just a quick overview of the cash flows, and I want to jump into all of the awesome questions that we get asked and really talk through kind of the answers to them. So the first thing, I'm going to start off in the summary tab, and the number one question that we get asked is on the right-hand side of the page, you'll see a spend unsaved cash flow column. So we get a lot of questions on what we call our planning method in RightCapital, and really that's kind of what explains the spend unsaved cash flow. So I'm going to head over to the gear icon up at the very top and then go into the settings. So in the settings, on the left-hand side, the first setting we have is called planning method. So we have three options here: cash flow based, modified cash flow, and goals based. So cash flow based is what we're going to do is take all of your clients' income inflows minus the outflows. And if we're using a cash flow based planning method, we will save the excess cash flow and reinvest it into the taxable bucket. So that assumes all cash flow surplus will be saved and reinvested into a taxable investment account. Right now, we're using a modified cash flow, which is going to show all of the income minus the outflows, and then anything left over is going to be assumed to be spent off. So that's why in the cash flows we see spend unsaved cash flow. That means we have excess cash flow and we are assuming the client spends it off. And then goals-based is unlike cash flow and modified, where we're ignoring income and expenses and we're looking at goals, savings, and account information to sketch up a rough retirement picture. So this is most commonly used with retirees or clients approaching retirement. So it's really to give that, I like to say, more rough retirement picture, as you've already accumulated, you have that nest egg, and then we're looking at the spend down in retirement. So goals-based planning ignores income and expenses that we've modeled out, and we're really only looking at goals, savings, and account information to then look at the spend down. So our two most popular planning methods in RightCapital are cash flow or modified cash flow. And the most common question we get is, when would I use one over the other? So modified cash flow is a great option for clients who may not be as diligent about tracking their expenses, and we want to be a little bit more conservative with their planning projections. So we're saying, okay, in the plan, we've already modeled out your expenses, we have your income, so we assume that if there is anything left over, the client is spending it. So, and that's just day-to-day life, they're going out to dinner or they're doing their Amazon purchases, like they're not tracking that savings and actually reinvesting it. So it's just a more conservative approach in the plan. So we see this mainly being used when clients are more likely to spend their money in the years when they have that excess cash flow. And then I'm just going to go back. I'm going to leave this as modified cash flow just for a visual. But again, that setting is always coming from the gear icon setting and then planning method. And again, the difference between cash flow and modified is how we treat the excess cash flow year over year. So cash flow based means we're saving it and reinvesting it, and modified means we are spending it off. So we're not saying it's going to anything, it's exiting the plan. They're spending on whatever they like outside the plan. So I'm just going to go back to the retirement cash flows again, just to show that as visual. So in retirement cash flows, and then I'm going to click into summary. And then on the right-hand side, we're in modified cash flow. So I will see a column that says spend unsaved cash flow. So in year 2029, the client, we take their total inflows of 247 minus their total outflows of 233, and they're left over with a surplus or excess cash flow of 14,278. So that means the client is just spending that off. We are not accounting for them saving that and reinvesting it. I always like to add a really important caveat to this, that when you are using modified cash flow, there is certain income that we will always save rather than spend, and that's any inheritance income, any net cash flow from the sale of a stock option, and then any proceeds from the sale of real estate or business. So let's say that Adam and Jackie sold their home, they made $75,000 off of the sale. We are not going to assume that in modified cash flow, they actually go off and spend that $75,000. That is actually reinvested automatically. And then the last really important thing is we don't automatically assume they spend their RMDs, so any excess they have from RMDs. We do have a setting if you'd like to show the client spending their excess RMDs, but again, by default, we assume that they save and reinvest that. So right now we're in modified cash flow, spending unsaved cash flow. But let's say the client is very diligent about saving and that all of that excess is actually being reinvested. I'm going to head back over to that setting. So again, gear icon, click into settings. On the left-hand side, planning method, and then switching over to cash flow based, pressing save. And then I'm going to head back over to the retirement cash flows. And I just want to show you what changed. And then back in cash flows, we no longer see that spend unsaved cash flow if it wants to load. And now we just see the net flows. So on the right-hand side, still using that year 2029, when we have that excess cash flow, we can see that that 14,278 is now being reinvested into the taxable bucket. So this is a great option for clients who are really good at tracking their expenses. It really, if they know that they're saving every excess dollar and properly documenting those expenses, this is a good option. This can also be beneficial for clients who are more conservative with their spending and just prefer to watch that grow over time. So I am going to go back over to the settings again, and I want to show one more popular use case. So a lot of the times we have advisors have the plan set to modified cash flow, and they want to show the client the value of actually saving it and reinvesting it. And the best place to do that is have the planning method, modified cash flow. Again, we're assuming the excess cash flow is spent off in the plan. And then I'm going to head back over to the retirement tab. And sorry, my computer wants to be, it's treating my Wi-Fi as a Friday afternoon. It doesn't want to load, but I'm in the retirement analysis. And then what advisors will do is now on the left-hand side in the current plan, again, I'm on modified cash flow, so I'm assuming the client is spending it off. And then if I scroll down to the action items, and then if I go all the way down to the very bottom of the page and click into edit, what I can do is add a proposed item for a taxable savings card. And then I'm going to click into this blue add new items, and then under savings, whenever you're in modified cash flow, you'll see a taxable savings option. So then I can click into that. And then here, I'm just going to leave it as Adam's taxable. And then I'm going to leave the contribution at 0 for now. And then let's say I want to say from today, and then let's run this through Adam's retirement. I'm just going to quickly press save. This adds that proposed taxable card to the proposed plan. Oops, sorry, I'm going to just put in a contribution here. So once I press save, what advisors will do is in the proposed plan under Adam's taxable, I can put this number, let's say, because each and every year they have a different excess cash flow. So sometime maybe it's 14,000, then the next year they have 16,000, then it drops down to 8,000. I can say in any year that we could possibly save 15,000, or let's just even say 20,000 from this year to retirement. In the proposed plan, I want to show the client actually saving it versus in the current plan, they're spending it. So this is the best place to refresh. And now I can show the client the value of saying, hey, right now you're not tracking your expenses. You do have excess cash flow left over. In the current plan, we have 79% probability of success with your median ending asset being 6.5 million. But if we were to just save that excess cash flow until you retire, you'd actually be at 84% probability, and you can see a large jump in that median ending assets because now we're saving it and reinvesting it into the portfolio. So I just want to walk through that one more time. That's a very popular use case for when you're in the cash flows and you're noticing that the clients do have a lot of excess cash flow year over year that they're assuming to spend. And you actually want to show them, hey, Adam and Jackie, what would happen if we actually saved it and reinvested it? So again, that is done in the retirement analysis. And then if I scroll down to the action items, the very bottom, we have our edit. And then our blue add new items is the way that we add just to the proposed plan that we're working on. So I click on add new items, go up to savings. When you're in modified cash flow, you'll see this taxable savings option. You click into it, model it out, and then press save. And then you'll see it on the left-hand side under savings, Adam's taxable. And then this number could be anything. So if you know it's varying year over year in the cash flows, RightCapital will say, we'll only save as much as they have. So in a year that it's 8,000, but we're putting 20,000, we would just save the full 8,000. We're only saving what they actually have. So this is not saying year over year 20,000 is being saved if they don't actually have it. But we can just put a large umbrella here so that we can capture all of the savings. And then let's say the client's like, yeah, that's too, I want to make sure I have some extra spending money, but let's bounce that back down to 5,000. And then it's very easy to make that adjustment, scroll up, and then on the left, we can say, okay, that still really helps the median ending asset as well as the probability of success. So that is the number one question we see, retirement cash flows, is what is that spend unsaved cash flow column? What is the difference between cash flow, modified cash flow, and goals-based planning? Again, it's really just how we're treating the excess cash flow. So on the right-hand side, starting in 2029, we do have some spend unsaved cash flow. And then on the right-hand side of that net flows, that $5,000 is that taxable savings card that I modeled out in the retirement analysis proposed plan. So it's a great way to show, hey, that you have some excess. What would happen if we actually took a portion or all of that to show the client the benefits of actually saving it and reinvesting it? And then lastly, I always like to point this out. If you're noticing a very large spend unsaved cash flow, it's always great to ask the client, hey, do we actually have that much left over? In some plans, you may see that this is a really high number. It's always a nice way to second guess of, hey, is all the data entry actually entered correctly? Because if we're modeling out your income and your expenses and we have a really large excess cash flow, some clients may say, oh no, I'm missing a specific expense. Let's add that in. And then this gets, more realistic. In some client plans, that is true. And there is a large excess cash flow and you really do want to show the value of saving that. But in some cases, it can also be a, hey, let's actually just double check the data entry because I don't believe you have that much left over year over year. So just a good checkpoint there. And then lastly, I just want to say this again, in modified cash flow, we do not always assume that everything is spent off. We do save income from stock options, any proceeds from selling real estate or a business, inheriting any income, and then RMDs. But I do want to show, if you did want to show the client also spending their unsaved RMDs every year, that is another setting in the gear icon settings. And then in our methodology tab, if I scroll down towards the bottom, we have a checkbox that says spend unsaved RMDs in modified cash flow only. So that is where you can also show the client spending off that RMD. And we like to say modified cash flow is just a more conservative approach to the plan because we do assume that everything is being spent versus saved. So that's the first question. And then up next, let's jump into the next really hot topic that we get asked. And I'm just going to head back over to the retirement tab. And the next question is, are the cash flows a straight line projection? And then yes, they are by default a straight line projection. So just year over year, we just add that annual return to the cash flows. And then the next follow-up question, is there any way for me to add a layer of volatility versus just showing the client a straight line projection? So in the retirement analysis, we're running through everything in a Monte Carlo trials and we're factoring in volatility, but over in the cash flows, it's that straight line projection. But we do have a way to factor in volatility. So I'm going to head back over. Sorry, I should have stayed in the settings, but in the gear icon and then settings tab, if I scroll down towards the bottom, we have a setting that is called Allow Display of Scenario-Specific Cash Flows. So as soon as I press save here, I'm going to head back over. Again, that setting is Allow Display of Scenario-Specific Cash Flows. And if I head back into retirement and then cash flows, and now on the right-hand side, next to that proposed plan, we now have this drop-down called baseline, and then our 4 default scenarios or modeled scenarios. So baseline is a straight line projection. So that's, again, what we do by default is just a straight line projection. But now I can incorporate different model scenarios into the client plan to give that level of volatility. So we have 4 pre-built model portfolios that you will see in your portal as well. So for example, bad decade followed by slow growth is a bad decade of volatile performance leveling off to reflect slow growth. So years 1 through 10 of the scenario are modeled after the S&P 500 and the Bloomberg Aggregate Bond Index, really to model year 2000 to 2009, and then years 11 is just reflects 2% equity, 1% fixed income, and then a 0.25 for cash return. And then I just want to walk through these 4 pre-built ones. Fed adverse scenario followed by modest growth is a 4-year hypothetical recession leveling off to reflect modest growth. Year 1 through 4 is loosely modeled after a stress test by the Fed Reserve. And then year 5 is, and beyond, is 4% equity, 2% fixed income, and then a 0.5 cash return. So just modest growth. Strong adverse scenario is from year 1 to 10 of the scenario is modeled by a positive market performance, and then it levels off at 8% equity, 4% fixed income, and 1% cash. And then flat 0% is kind of the ultimate stress test here, and it's really just taking out, eliminates equity, fixed income, and cash returns for the duration of the plan. So here I can use the 4 pre-built, but you can also add your own. So I also want to show where you can do that. So again, baseline, straight line projection, and then you can bring in model scenarios if you want to introduce levels of volatility in the cash flows. So if I wanted to build out my own model scenarios, I head back over to the advisor portal. So up at the top left, just clicking into RightCapital, that logo brings me right back out to the advisor portal. And then up at the very top of my screen, clicking into models. And then we have scenarios. So here is really the detailed overview of the 4 pre-built models. You can see year over year what we're doing to the returns. And then I can always add a scenario. And then it will always default to new scenario. You can just click into it and model, or you can name it whatever you'd like, press save. And then here you can completely control the change in equity, fixed income, and cash over time. So that is models, scenarios. So I'm just going to head back into Adam Sandler's plan. But this is a widely used setting across the board, really just to show the clients something else other than straight line projections. So again, if I go retirement cash flows, once I check off that setting, I will then see baseline, again, that straight line projection. And now if I click on that drop down, I will see that new scenario that I've added in the advisor portal under the models tab. So very helpful there, and you'll see that across each tab here. So in the summary, invested assets, accounts, here I can show flat 0% return, and then refreshes pretty fast, and you can see year over year what's the change there. So that is, again, the question, are the cash flows straight line projection? Yes, by default they are. Is there a way for me to add a layer of volatility to really show, something other than the straight line projection? And the answer is yes. This setting is in the gear icon settings. And then if I scroll down in the methodology tab on the right-hand side, it's just checking off allow display of scenario specific cash flows. And if you want to turn this on for all clients across the board, you can also do that in the advisor portal under those global settings for clients. So a lot of advisors will just turn that on. So from moving forward, that setting is always turned on for all clients. All right, so another one while we're here is a common question we get is, why don't I see a savings from an IRA or a 529 that I've modeled out? So sometimes when there's it, I'm going to back up. So the question is, why don't I see the savings from the IRA savings card I set up or the 529 education fund for the client? So in years that the cash flow is insufficient, so we can't actually make that contribution, we won't. So if you don't see that, You can come to the settings here, and right below allow display of scenario specific cash flows, we have a setting that says you can use the taxable account to fund IRA and 529 savings when the current year cash flow is inadequate. So if you're ever not seeing a specific savings, maybe it's kind of phased out with the contribution limits, but if they're still in that range to actually make that contribution, then you can come here and say, okay, if their cash flow is inadequate for that year, you can check this off to make sure that we still fund that contribution, but we're just using the taxable account. And again, that's if they have the funds in their taxable bucket to actually fund that contribution. So if you're ever not seeing savings into an IRA or 529, come to the settings, and if you would like to elect the taxable account to fund those contributions when the client doesn't have the adequate cash flow, you can check that off here. So that is just a quick one there. And then the next one, heading back into the cash flows, question is, where do I see the employee match information? I only see my client's contributions. So if I'm in the cash flows and then in the summary, the most common question is and I'm just gonna put this back to baseline, sorry, just so we get this updated. So on the right-hand side under cash outflows next to tax payment, we have our plan savings. And if I'm clicking into this, if I click into the 401k, common question here is I'm only seeing Adam's contribution and Jackie's contribution into the 401k, but back in the profile income, I did map out the employer match information. The employer match information is going to be showed in the invested assets tab. So summary plan saving is to show the client contribution, and then the employer match information is showed in the invested assets tab. So then I can click into employer match, and then here I can see Adam's employer match and then Jackie's employer match. So again, just want to show that one more time. In the summary tab, if you're looking at plan savings, this is going to be the client's contributions into those different accounts. And then if you've mapped out the employer match information, that is going to be in the invested assets tab under employee match. And whenever you see a column header that's underlined, that means you can click into it for more details. So if I wanted to see what's making up this plan savings, again, I can click into any header that's underlined, and that's going to give me an even better breakdown of what's making up that figure. All right, next question is the standard withdrawal sequence in RightCapital is to pull from the taxable bucket, then tap into the tax deferred, and lastly, the tax-free bucket. But how do I override that and model the client pulling from their 401k in a specific year or any account in a specific year? So again, standard withdrawal in RightCapital, when the client needs to pull from their portfolio, we're going to pull from the taxable, then the tax deferred, and lastly, the tax-free. But if you want to override that standard withdrawal sequence and show the client pulling from a specific bucket in a specific year or over a specific time frame, we can do that in the profile tab and then the income. So then when I'm in profile income on the right-hand side of the page, clicking into add income, we have our distribution cards. So when I add a distribution, I can model out what is the client pulling annual amount. Is it a fixed dollar amount? Is it a percent of the start year account balance, percent annual from the account, or I want to deplete it over X amount of years? And then here I just have to say, what bucket is it coming from? 401k, Roth, pension, annuity. So I can model that out here. Then I just want to put start year, end year, and then the type, either a normal distribution. Am I converting that to a Roth IRA? Am I rolling it over, or even just modeling out net unrealized appreciation? But typically it's normal distribution, taxation, standard rule, but in different cases, if it's penalty-free or tax-free, I can model that out as well. And then I just press save. So now I can say, okay, in year, let's say 2035, he's pulling $25,000 out of his 401k. I can model that out. So calendar year 2035, ending that at the same year, and then pressing save. So I have that distribution entered. And now in the retirement cash flows, I just want to show you where that funnels through. So again, the question really comes through is how do I override or show the client pulling from a specific account bucket? Because in the cash flows, I just see it coming out of the taxable bucket, but I really want to override that and have it come out of that 401k. So now in the summary tab, under plan distribution, so under cash inflows, under plan distribution, I can scroll down, and then under that 401k, I can see in 2035, I'm pulling from that 401k. And then I can also see that in the accounts tab on the far right. And then I can click on this ending balance by accounts and look at withdrawal from accounts, and I would see that there as well. So now I can see from the 401k bucket, I'm pulling that $25,000 out. So just helpful there. Always like to point that out. Just overriding the standard withdrawal in RightCapital is the profile income distribution cards. That's the whole purpose of the distribution card itself. And then the next question, will a client's RMD automatically show up as income in the cash flows? So yes, we automatically calculate the client's RMDs, and we will show that again in the cash inflows, plan distributions, and then I can scroll down to start seeing those RMDs. Another great place to see RMDs, again, is in that accounts tab. So if I head back over to accounts on the far right, clicking on this drop down, and then I can look at the RMDs. And then same thing here, scrolling down, I can see all of that information here. So yes, we automatically calculate them, and you can see them in the summary tab under plan distribution. And I can come over to the accounts tab and then click on this drop down where I see ending balance by accounts, and then switch over to the RMDs. I also want to point out the RMD setting. So at the very top right, as you can see, the cash flows really correlate with settings. So at the very top right, clicking into the settings, and then going back on the right-hand side, right next to cash flow and simulation starts, I can click on the plan distribution method here. And then I just want to walk through these. So RMD added to manual distribution is the default. So in this case, RightCapital will add the amount of any distributions to calculate the RMD amount. So that's just, we automatically calculate them. Greater of the RMD in manual distribution means that the RMD is calculated. I should back up, sorry. It means that the RMD calculated is greater than the distribution entered. RightCapital will use the automatically calculated RMD amount. And then no RMD manual distribution only means that RightCapital will not automatically calculate the RMD, and then we'll use the income distribution cards based on what you have put in there. So no RMD, we're not calculating it. RMD added to manual distribution is we're looking at everything and just calculating the automatic RMD. And then right above that is the next question is what does cash flow and simulation starts? Our default is to start the cash flows at January 1st of this year. So I'll see 2025 as the first year of the cash flows. If I wanted to show it starting January 1st of next year, I can do that as well. And then if I wanted to show a current month, which is our rolling 12, that would be starting the cash flows today and moving to next year, May 30th. So it's just a rolling 12. So the cash flow assumes to start today and then rolls into the next year. But our default is to start the cash flows January 1st of this year. All right, I have two more to walk through today. The next one is, can I change the layout of the cash flows? So this is just preference. We see a lot of advisors changing the layout. Maybe they don't want the maps to be the first thing that lands. If you're inviting clients to have access to the cash flow, maybe you don't want this to be the first tab, or if you're presenting the cash flows in a different way, you can just totally restructure how this looks. So all I have to do is go back out to the advisor portal. So again, just clicking on my logo up at the top left. And then if I click on Adam's plan, and then on the right-hand side, I just have to click into planning access. And this lets me rearrange all of the planning modules and how they are reflected when I open the client plan. So all I have to do is scroll down to the middle of the page and click into retirement, click into cash flows. And then here I can completely change the layout. So if I hover over the title itself, you'll see on the left-hand side, this little, if you hover over the 6 dots, it turns into a hand icon, and then I can change the layout. So if I wanted to drop that so that summary is first, or if I wanted to highlight that the net worth is first, we see that very common to show net worth. And then all I have to do is press save. And then just press save one more time on the planning access. And just while we're here, I always like to show that you can change the complete layout of the modules itself as well. So if I wanted the tax tab to show before education, I could do that. Or if I wanted the profile tab, that's another very common use case we see. Is the first tab that the client will see when they log in is that profile. But again, just dragging and dropping. And then if I go back and open that client plan and then head back over to the cash flows, I will now see that new rearranged layout. So you have complete control on how that is shown to clients, or just while you're in RightCapital and how you want to see that. So just change that over to net worth, summary, and then again, maps was moved to the middle. So that's just done in the advisor portal and then the planning access tab. And then the last question we have today is, can I include multiple proposed cash flows in a report deliverable? So here in the cash flows, I can look at all of the plans that I've built out. So we have our current plan, proposed plan, and then I have 2 additional proposals that I built out, moving to Florida and then retiring at age 62. So in the cash flows, I can switch between, and this will automatically update. And then a lot of advisors would also like to include the different planning proposal and the cash flows in their actual report deliverables. So if I head over to the very top right of the screen and click into that gear icon and then go to the report tab. So again, this is where I would download my report deliverable for the client. And then in the middle of the page where I see retirement, click into cash flows. And then at the very bottom, I can select what plans I include for the cash flows. So if I wanted all 4 cash flows to be included, I can check that off, but I'm just toggling on select plans. So just want to show that one more time. If I wanted to include multiple cash flows in a report deliverable, I head over to the gear icon, report tab, then I click into cash flows because it's underlined. That means I can click into it for more detail. I can completely control what portion of the cash flows are included in that report. So if I only wanted the maps and then maybe just a brief summary and then invested assets, I can do that. And then at the very bottom, just toggle on select plans, and then I can include all of the cash flows for those different plans. So another very popular option if you're kind of walking through different proposals. And then just while we're here in the reports, you'll see that other modules are also underlined. It's really just giving you more control over a more lengthy module, and if you don't want to include things in the report that maybe are not applicable to the client. It's very popular in retirement analysis. If you didn't want to include everything, you can have control here as well. Awesome. So I know that's a lot of kind of moving parts, but our retirement cash flows really correlate a lot with different settings here. The main one being the planning method and how you choose to treat excess cash flow in the plan. Again, our default is modified cash flow. It's assuming that the excess is spent off and it's not reinvested. And then cash flow based is assuming that the excess is saved and reinvested. And then goals based is that more rough retirement picture, really popular if you're working with somebody who's already retired or very close to retirement, where we don't really focus on income and expenses, where we're just looking at goals and spending it down and what that looks like. And then I just for a visual while we're here, I wanted to show goals based because you get a little bit less information in the cash flows. And this is what we kind of mean when you hear us say rough retirement picture, because if I switch over to goals based and head over to the retirement cash flows, just want to show you what that looks like. So now in the retirement cash flows, now we will have a net worth and accounts tab. So we're not focused on that income and expenses and kind of looking year over year what's going on. We're really looking at what is your total net worth, and then where are we actually spending the money down. And then same thing with accounts, just okay, what do you already have, and then what's happening year over year.